Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of the Chicago soybean complex. Chicago soybeans. 28 weeks ago here, and at every opportunity since, I have said, and I quote, "The only other thing to bear in mind is not here on this daily chart, but in Chicago soybean meal." And that is the well-highlighted annual key reversal down we saw there for 2023. Not directly related here, but not worth ignoring either, end of quote. Last week I said, and I quote, "I think with us being now in the second month of the new year of 2025 that I should now set aside this as the world and my charts have moved on. And there are more recent and more interesting features to discuss," end of quote. Well, I think this is still true. This thought, though, still also haunts me. The original thought still also haunts me somewhat. Nevertheless, there have been three main features I brought up 2 weeks ago and do so again this week. The first is a big picture item, and that is the potential we have now for a very large July 2024 to date double bottom pattern, though these past 2 weeks have been troublesome to this idea. We are nevertheless still on the verge of completing the construction of this pattern, and also on the verge of triggering the outcome. Thus, if prices can break higher over, and here's the bit you need to concentrate on, as I am not exactly sure which one I would choose or use, but over the 50% Fibonacci line of the May to August 2024 move at 1098 or the 61.8% absolute Fibonacci at 1106, then we would have a primary potential up as far as 1195 and a secondary harder to achieve potential up as far as 1235. As I said earlier, these past 2 weeks have been troublesome to this idea, but they have not completely extinguished it. The second feature was the short bull channel formed since the break higher in the middle of January, through to early February. The market broke down through the lower trend line and gave potential down to today, the 1043 level, which we are testing right now, along with the neckline extension of the very small late October to late November 2024 head and shoulders pattern, currently at 1041, which is also being tested today. The final point from 2 weeks ago was the chance to make a weekly key reversal here. However, the market faltered at the last point and instead chose to make a lesser outside weak pattern last week. Since that time, prices have edged lower, further below the declining long moving average, currently 1051, and towards a slowly rising short medium moving average, currently 1032, and a very slowly declining medium moving average, currently 1019. And in the process formed a small 3 week only descending wedge pattern, currently 1031 to 1058, highlighted in bright green on my daily chart, 3 week only until now, that is. A break from this pattern when it comes could be very interesting, as if it were higher than the 50% Fibonacci line and the 61.8% absolute Fibonacci line, overhead will be under threat, whilst the break lower would run into the congestion scene, mainly between mid-October 2024 to mid-January 2025 in the 990 zone, assuming of course it pushes down past the dark blue neckline extension, and that's currently at 1020, or the late July to late August reverse head and shoulders pattern. Chicago soybean meal. The main recent pattern driver here in this market had been and still is the dark blue May to October 2024 bearish shift picture that you can clearly see highlighted in, as I say, dark blue on my daily chart. The market is running a little underneath the overhead upper time, currently at 312.90. This pattern had previously been breached on the upside in January, but it had not been broken, and it had also been reinforced by a congestion area further ahead between 323.30 and 326.90, as well as a declining long moving average, and that's currently at 319.30, along with the nuisance value, I suppose, of the bright red trendline extension to the July to September 2021 descending wedge pattern, which is currently at 320.20. The top side of the dark blue bearish shift pitchfork had been severely tested during late January and early February, but it had held. The reactionary move lower after this testing on the upside has seen prices drop down below the support from the mauve medium moving average, which is currently at 303.80, that is now acting as resistance. And to a certain degree, though less so than the former mauve medium moving average, the green short medium moving average, currently 305.60. We also had, until 2 weeks ago, an interesting bright green mid-December 2024 to early February 2025 bull channel calm ascending wedge pattern that was also a head and shoulders pattern. These were not that clearly defined, but they were nevertheless still there. The break below the bright green lower trend line now sets up some opportunities on the downside. For an ascending wedge pattern, there is a primary target X down in the 293.80 zone and a secondary harder to reach target X1 down in the 265.60 zone. For the head and shoulders top pattern, we have a primary target X2 down in the 293.30 zone and a secondary harder to reach target X3 down in the 265.60 zone. The target for a drop below the bull channel idea is below both of these, so I've not mentioned it right now. Looking at the targets, the primary targets X and X2 are doable, but still within the congestion seen back in April to August 2020 between 282 even and 300 even, and again most recently in November and December last year. However, the secondary targets for both are below this congestion and thus harder, much harder to attain. A final feature which I would like to mention, and I think is the inspiration for the move, this move lower, was the weekly key reversal down here 2 weeks ago. Please just bear that in mind. Now, this commentary would not be complete without my discussing the elephant in the room, or else the elephant that was in the room, which has stayed there throughout 2024 and also resonates now into 2025. And that is the annual key reversal down seen here at the end of 2023. I said, and I'm afraid I have to repeat something I've highlighted now for 88 weeks, so coming up for 2 years. And I quote, "I now only need to remind you once again of my words of 67 weeks ago, so that's now 88 weeks ago, and ever since, when I pointed out that Chicago soybean meal was about to have that rarest of patterns, an annual key reversal down. This duly came about at the end of 2023, and we have been living in the shadow of this pattern ever since," end of quote. I've also added ever since, and I quote, "There is only one thing you take away from any of my musings, that it have been those words." As I said 3 weeks ago, I added, and I quote, "Today, as we fully enter the second month of 2025, perhaps, just perhaps, that shadow is dimming and other features might just start to take precedence," end of quote. Well, these last few weeks have shown that the shadow cast by that supremely significant pattern so long ago still darkens the skyline of this market. Chicago soybean oil. At the end of last year, I drew what I called, and I quote, "a new prospective dark blue bullish Andrews pitchfork" that I drew 4 weeks ago, which is now 14 weeks ago, for the mid-August to late November move, end of quote. I have since finessed this into a mid-August to late December 2024 dark blue bullish Andrews pitchfork, with the market in between the overhead middle time, which is currently at 49.16, and the lower time below, currently at 42.99. The middle time overhead has been tested throughout January on the upside and has held down prices on the closing basis. However, that is not all, and I am somewhat loath to mention this, but that is not the only bullish pitchfork for this move, and we also have a bright red, shallower bullish shift pitchfork, operational for the same move. The market is right now testing from above the middle time below, and that's currently at 45.29 for this pattern. In January, also saw the middle time being tested from above, and it more or less held. That is where my small quandary is, because I do not like having, as in the case here, both the bullish Andrews and the bullish shift pitchforks for the same move on the same chart at the same time. One should morph into the other, or finesse into the other. Usually, but not here, as both are still valid. Nevertheless, that is what we have, and until something else shows itself, I will stay with these bullish pitchforks. Now, talking about something else showing up, we have had for a few weeks now an immediate open question here. Is the action since early January today, is it a double, now a triple top, or a bullish halfway hesitation, or is it something else entirely? That is the most interesting question right now. This week it is increasingly looking like we are setting up to make a triple top, though it's not certain by any means. However, the idea of a bullish halfway hesitation, well, the recent action does not seem to have the strength we saw in mid-January to make a strong move higher, such as I'd like to see if it was to become a bullish halfway hesitation. Last week I spoke about how we have the likely development, one that's quite far advanced, of another bullish pattern. So please look at the whole of the late June 2024 to date action as a possible, really big double bottom. This is not done yet, but any prices rising at this stage could soon trigger such a pattern. However, there is always a however. However, it all depends on what happens at the key 38.2% Fibonacci line, the big March 20 to April 22 move at 49 cents. This Fibonacci has been phenomenal. It capped the market in July and November last year, and I would look to this to likely try some capping action like this again, this time, especially when the dark blue middle time moves above it, which it is or was doing that now. It could from any time onwards. So keep a wary eye on this level, especially for any consecutive closes above it, and even all the way up to the next interesting lesser Fibonacci line at the 61.8% Fibonacci line of the July 23 to August 24 move at 49.92. Added to this is what I said last week, as it's still valid, if perhaps more on the downside now, and I quote, I just keep a wary eye on the old congestion seen back in July 2013 between 46.80 and 47.30, as it seemingly is still somewhat influential even now. I know that we are below it, but still, yeah, just keep an eye on that one. Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.